Okay, guys, then let's move on to the detailed discussion of discounted pre-cash flow valuation method. As I told you, discounted pre-cash flow valuation method we can consider uh, practically we consider it as our practical value primary valuation method, because uh, from discounted pre-cash flow method we try to derive the value of the business based on the present value of future cash flows. That's the core of, or we can say as the core idea of the discounted free cash flow valuation method. Simply, we derive the value of the business using what? Using the present value of the future cash flows. The main, actually, we can say main value driven practice or the practice that cause we create a value or the value creation factors. We can identify two value creation factors under the discounted free cash flow valuation method. First one is the free cash flow. Second one is the discounting factor. Simply, under the discounted free cash flow valuation method, value of the business mainly we can derive based on the free cash flow and the discounting factor. Based on the free cash flow and the discounting factor, simply we can derive the value of the business. Then simply we can define free cash flow as the what? Free cash flow. Cash flow. It's about the cash flow. Okay. Then simply it is a cash flow. Then what is the meaning of the pre-cash flow? Pre-cash flow. Pre-cash flow means pre-cash flow means we can say cash flow available to distribute among, we can say as the cash flows available to distribute among both equity shareholders and the debt holders. Simply we can say pre-cash flow. Then cash flows mean the net cash inflow, cash inflow minus cash outflow. Then we have specific word, no? We can say as a specific word, pre-cash flow. Then what's the meaning of the pre-cash flow? Simply we can say pre-cash flow as the cash flows available for equity and the debt, for the both equity holders as well as for the debt holders. Then from discounted free cash flow method, then one value driven factor or the value driven main factor is the pre-cash flow. Pre-cash flow. As I told you, we get the present value of this pre-cash flow, then this present value we identify as our business value. Then one factor is the pre-cash flow. Then other factor is what? Discounting factor. Because we need to get our present value of these cash flows. No, then to get the present value, we need to discount these cash flows. No, then to incorporate time value of the money. All of you know the time value of money concept. Then I hope all of you have idea about the time value of money concept. Then to get the present value, we need to incorporate time value of the money with our future cash flows. Then for that purpose, we need to use discounting factor. Then using this discounting factor, simply we can get the present value of these future cash flows. Then this discounting factor is not, the purpose of using discounted factor is not only getting the present value of these cash flows. Okay, then this discounting factor we can say from investor perspective, we can say this as the investor required return. Simply, we use this investor required return as our discounting factor, because we can't, based on our judgment or whatever we think, if we think 10% as our discount factor, then we can't use 10% to get the future cash flows. Then there should be definite rational. No, we need to select discounting factor based on rational. Then normally discounting factor for the calculating the present value of the business free cash flow, normally we use what? Investor required return. Or we can say actually discounted factor is similar to the opportunity cost of the investor's investment. We can say as the opportunity cost of the investor's invested amount. Simply investors required return. Actually, this discounting factor mainly try to associate the risks of the investment with the our valuation part, because we need to derive the value from our investor perspective. For the investor perspective, okay, because this value is for our investors or our equity shareholders and the debt shareholders or the debt holders. Therefore, we need to use their required rate, which is their risks or their investment risk associated. And other factor is this other thing is this discount impact is not only about the investors required return. Most of the cases we add premium to our investor required return to associate some of the economic factors, and there can be some company specific risks or the industry specific risks, and there can be some pressure from the competitors. And when we consider the Sri Lankan context, our or the South Asian countries, most of the countries, they are currently facing some economic crisis. Then to address those macroeconomic things or the company specific risks and the industry specific risks, we add some premium to this investor required return. We add some premium to this investor required return, and then summation of investor required return and premium we use as our discounting factor. Then using this discounting factor, we get what? Present value of our future free cash flows. Therefore, then value under the discounted free cash flow method, completely we can derive based on free cash flow valuation and the discounting factor. Therefore, we can say main value driven factors under the discounted free cash flow valuation method as first one is free cash flow and second one is the discounting factor. Then free cash flow means what? Free cash flow means that cash flows available to distribute for both equity and whom? For both equity and the debt holders. Then to get the present value of these free cash flows, we need to use what? Discounting factor. Then simply we can say discounting factor as our investor required return or the opportunity cost of their investment. But normally for this investor required return, we add premium to associate or to replace some risks associated with the country or the industry, or some of the company may have some company specific risks. To associate those things, we add premium to this investor required return, and then this summation we use as our discounting factor. Okay, then these two factors or these free cash flow and the discounting factor we can say as the main value driven factors of the discounted free cash flow valuation method. Therefore, under the discounted free cash flow valuation method, I hope to discuss these topics because, as I told you, entire method or our discounted free cash flow valuation method completely depend on free cash flow and the discounting factor. Free cash flow and the discounting factor. Therefore, this video tutorial series I am planning to do this series based on these topics. Actually, as I told you, I am not only trying to discuss theories. I am also trying to link these theories with our hypothetical scenarios. Okay, then let's discuss these topics one by one. Then at the end of the discussion, then you can get comprehensive idea about the free cash flow valuation method after end of this 10th session for the valuation of the business. Okay, then let's discuss these methods one by one.